Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video about silver price predictions. We are going to jump into this article from Kitco, but before we start, I want to mention that I work every day, all day long, finding articles, finding the newest, latest, freshest news to update you guys and gals with the best strategies, the most up-to-date information, so you can invest accordingly. So please make sure to like these videos. It's the best way to support the channel, besides being subscribed. So please smash the like button. Let's see if this video can get 200 likes. Every single one of you, go like the video right now. Also subscribe because I post daily videos. Turn on post notifications, but I'll shut up about that now. Let's jump into the video. So the price of gold dropped $29 and the price of silver dropped 27 cents. We'll get back to where we think prices are likely to go in a bit. So this is going to share price prediction. I actually was just reading an article earlier today talking about was a video, and this guy was predicting $150 silver. So many people are starting to become more bullish on precious metals, especially silver. In recent reports, we've looked at the elevated bid-ask spread in gold, though not nearly as elevated as some gold bugs would have you believe, and the elevated gold basis. As an aside, we continue to see articles that get high gold basis exactly backwards, the way John Maynard Keynes got commodity markets backwards. A high and rising basis is not a sign that everyone or that anyone is worried about a shortage of metal, but of abundance. Below is a graph of the spot price bid-offer spread in both gold and silver. Notice that since April 3rd, the spread in gold is down significantly from its high with one spike, though not back to its pre-2020 normal. Silver appears to have rolled over, but at 4 cents, its bid-ask spread is still quite elevated. So you can see April 3rd, and then you see this drop. The below is a graph of the gold basis continuous. So with the bid-ask spread, the basis has come back down. It's almost normal. Here's the graph of silver basis continuous. Like gold, the basis had become quite elevated. Like gold, the basis has come down. Unlike gold, silver basis is still elevated, though not extraordinary so anymore. So what does this all mean? Dollar supply and demand. We think that it means that the Fed's massive asset buying program has had its intended effect. It will have a number of other effects as well. The Fed has bought about $2.5 trillion worth of bonds, which has grown into balance sheets by 60%. This is the stuff of madness. See the graph of the Fed's assets below. The change is greater than the Fed's crazy buying frenzy in the wake of the last crisis, though smaller as a percentage of growth. The intended effect is to take the pressure off the banks. Reduced contractionary pressures on banks' balance sheets frees up the banks for profit-making and risk-free activities such as carrying gold. The Fed will be able to get away with this for long as gold bids on the dollar, and the high basis is proof that the bid is very strong for now. We can think of two primary gold bidders on the dollar. One, likely short-lived, is the leverage player who buys dollars in order to meet margin calls. Each drop in asset prices, whether in stocks, real estate, or somewhere else, forces some to liquidate whatever they can to raise dollar cash, which is often gold, which is true. The quick flipper, the short-term person who, transfers from stocks to real estate. So I get that one. The other is the much larger group of people worldwide who are forced by economic circumstances to sell their gold to buy food. Those who claim that the dollar can go poof in an instant, that moment that everyone loses faith in it, would do well to understand the desperate need for dollars of both farmers and eaters. Neither party is acting on faith, or for that matter, driven based on belief in the credit of the United States government. They are responding to incentives with which they are presented. They want to keep their farms and fill their bellies, respectively. So long as these dynamics continue, there will be a robust gold bidder on the dollar. Gold as an investment. Of course, there is the other side of the trade, a group of people buying gold, you and I. Ignoring the speculators and the momentum chasers, as these groups have little effect on the long-term price trend, there is logical reason for people to turn to gold as an investment. As an aside, gold is not an investment. People say they're investing in gold, but if they are just buying gold to hold or wait for its price to rise, they're not investing at all. They are either speculating on the price of gold or they're opting out of investment. That's what it means to hold money, not to invest. Two reasons why people turn to gold now more than ever. So why gold? Why now? One, by our count, the baseline deficit before the virus was 1.7 trillion. Then the CARES Act added 2.3 to 0.5 trillion. Finally, tax revenues have dropped substantially. Let's assume by 1 trillion. The U.S. government is now sinking deeper into debt at a rate of at least 5.5 trillion a year. We say at least because it seems likely there will be another stimulus bailout bill. Do you want another creditor to Uncle Sam? Everyone who holds a dollar balance is a creditor. Investing in gold or investing in gold or gold investing are the ways to opt out. The other reason is that interest rates have collapsed. In the fall of 2018, interest rate on the 10-year Treasury bond was 3.2%. As recently as January, that interest rate was 1.9%, but by March 9th, it had fallen 0.5%, and since then it's been bouncing along the floor. See the graph of the Treasury yields below. Wow. At 3.2%, many people felt a strong incentive to lend to the U.S. government. In addition to the yield, there were certain capital gains to come out, but now 0.5%, there is hardly any yield, little expectation of capital gain. At the same time, that risk of lending to the government is rising rapidly. The return has been taken away. No wonder people invest in gold. As do we not predict any end to either skyrocketing debt or collapsing interest rates, we therefore do not predict any end to demand for gold investing. And that's definitely true. This leads to the question of silver and gold ratio, 114. This number is literally off historical charts. In other words, silver is very cheap when measured in money. There are two schools of thought here. One, silver being demonetized by the market. Government has no power to decide what is money any more than has the power to decide what is gravity. If silver isn't money, then we would expect silver mining to cease. Then the vast hoard of accumulated over thousands of years of history would be consumed. In the end, there would be no more buffer of silver than palladium or copper. The price during this period, this hoarding and consumption would be necessarily low, which is definitely crazy. The other school holds the silver may be temporarily out of favor, and many people who traditionally invest in silver are under greater financial pressure than those who invest in gold. If this view is correct, at some point the arbitrage to trade some of their gold large amounts for silver, or trade their gold for large amounts of silver, trading the gold to silver ratio. We adhere to the second view, and that's definitely what I view as well. So, commodity prices less than zero. We wrote about negative crude oil prices recently. Now, we have read that due to closures at meatpacking plants, companies like Tyson are slowing or stopping their buying. Farmers may be forced to destroy their animals. Think about that. Alive, an animal incurs costs due to feed and labor. With no buyer, it is better to kill the mature animal more than growing them behind than to keep them alive. If there were a market to express prices, the price of such animals would be below zero. The virus lockdown may not have provided the magic make pigs fly, but it can cause something unprecedented, commodity prices below zero, and debunk that idea that a present good is always worth more than a future good. Just look at the mess in crude oil markets when a futures contract was worth $20, but now it's worth negative 38. Wow. So I definitely think, see, they're bullish on silver, and I like the part down here, why gold, why now, and it kind of goes into the two schools and is talking about some theories that could happen, right? There's two schools of thought here and why their gold to silver ratio is so high. And there's actually other theories as well, but they go off two of the more popular ones. And it's interesting because the first one is very, very bearish for silver. They're actually both bearish for silver, but this one has more potential, right? It's just people, because gold is more of a safe haven asset. So right now, in times of economic turmoil, since this virus hit so hard, of course gold's going to get flooded, right? But silver carries afterwards. It carries a little longer. It's gold's little brother. So it's going to take some time, and that's the whole point of the video. Is silver takes time. It's not going to rise as quickly as gold because gold is the safe haven metal. Silver isn't seen as safe haven as much as more of an industrial metal at that. So anyways, I'm going to wrap this video up here. If you enjoyed this video, if you thought it was educational, informational, or just entertaining, make sure to smash the like button. Let's see if this video can get 200 likes. Everyone, go like the video right now. I appreciate you so much for tuning in, especially if you stuck around this long in the video. Thank you so much for tuning in. The link to this article from Kitco will be in the description. This was Silver Slayer. I'll see you guys soon. Peace.